Good evening, everybody, and welcome to Live Market Analysis for this Monday, January 15. My name is Capolingua. You know who I am. From nowhere in particular, I'm here to chat markets with you for the next hour or so. Introductions are not required in these. Throwback to the old Think Markets sessions, aren't they? Something we have to do, not just a throwback, it's essential here, is to remind you that the content of this presentation is general in nature, does not constitute a recommendation. It doesn't take into account your financial situation, your personal objectives or needs. Before acting upon this general information, you should consider it carefully. Seek the help of a financial professional before you employ any of the strategies here. It's very important you also understand that trading is risky. I guarantee if you start trading today, at some stage you are going to lose money. And ultimately it's you and not me who's responsible for everything you choose to do because you are in control of you. I will do my best to teach you a responsible way of trading. This is not about get rich quick. It's not about rocket ship emojis. It is about a sensible, organised, disciplined and consistent way to interact with markets. Over to you. Get the Q&A window rolling, get the request rolling in the Q&A window, I should say. I'll give you my best technical and fundamental. No, I won't know fundamentals. We don't have the definitive icon screen, and I won't ask you to buy me enough coffees to get that going because I don't think we could afford it. Let's head over to the Amy Broker screen. Oh, those were the good old days. And we can see here, we'll kick off with the NASDAQ. I'll give you the quick whip around the grounds, and you're welcome, of course, to ask about anything macro as well. But onwards and upwards, we were all a little bit concerned. I think this was the candle we had last time, maybe 1, 2, 3, 4, 5. It might have been this one. Upper shadows. They're pointing in the wrong direction for excess demand, aren't they? There really are candles which signify a bit of excess supply. Don't get me wrong, they're not, death knells for an uptrend, but they didn't look good. So the words I used were things like cautious and neutral, I think I might have even said. And then lo and behold, as can happen in the bull market, I think I tweeted about it the day after, this is just what the bull market does. Big white candle, just as it invites you to doubt it. Boom, there's the white candle. And I think the next candle, it started low. It actually tried to move back into the range of that day. Demand came in, pushed it back to the close. This is fine. This is fine as well. I know it's a black body, but I'm not too worried about that. Friday was neither here nor there, but don't forget it's a long weekend over there in the US. We've got the Martin Luther King Jr. holiday today, so it makes sense you're doing a little bit of book squaring and profit taking. What was ultimately a very good week. If you don't believe me that it was a good week, we can do that. We can see that the weekly candle actually was very good, and it's a 2-candle pattern. If you blend those together, you get a nice lower shadow. If you don't understand this concept of blending, basically you take the common open of the 2 candles. So if we were to point to the common open of these last 2 candles, I guess, where did they open? Think about it, opened here, didn't it? That's the common open. The common high would be here. The common low would be there because it's the lowest of the 2 candles, isn't it? And then the common close has to be the close of that second candle. So that's blending those 2 candles together. And of course, I'm referring to blending the 2 weekly candles together. And if you blend those 2 weekly candles together, you actually do get a candle which would look something like this. Not exact, but something like, I don't have my vertical line tool, do I? So I'm going to draw an arrow, pretend that that's an arrow. New laptop, had to reset everything up, obviously, so I haven't put the vertical line drawing tool in, and it will be there next time we meet. And just to illustrate, we want that. We'd prefer that. Oh, that's not what's supposed to happen. We'd prefer that to be a white, fill colour white. There we go. Must have clicked the wrong button, and my downward pointing shadows disappeared, but it would look something like that. That is if you were to blend those last 2 candles together. Very, very confusing, Carl. Okay, otherwise pretty hunky-dory there. I'm not too fussed about it. That's the message. We bounced off the short-term trend ribbon. That's what's supposed to happen. Long-term trend ribbon is up. The price action could be better, don't get me wrong, because we don't really want to see the lower troughs that we've had there, but it was a pretty good run as well. So I'm pretty happy with that when we resume trading Tuesday night. S&P 500, no complaints. In fact, that probably looks even better, doesn't it? I mean, a shallower pullback, a more emphatic rally from those lows. I do have one problem with US markets, and that's with the Russell 2000. You've probably seen it as well. This is really the heart of corporate America here, 2000 small caps, they're big caps compared to Aussie stocks, but small caps for the US. And this big black candle is disturbing, and the big black candles before that are disturbing as well. Look, long-term uptrend is still holding, but it does smack of risk off, a little bit of risk off there. But no, I won't use words like, I'm always cautious, neutral. I think, we're definitely skewing more to the long side here, and, reinforced by some, I was going to say, strong charts in Europe. That one's not as strong as perhaps I remember it to be, but the DAX is I think, pretty strong, and they're actually starting to slide a little bit, aren't they? Well, there you go. Europe's not as strong as the picture I had in my mind, and the picture in my mind is very well set for Asian markets, the Hang Seng in particular, which is looking terrible, but really only reflecting the Shanghai Composite there and the China A50. A couple of Asian markets which are bucking the trend and look absolutely amazing. The Nifty 50 over there in India. What an amazing chart that is, an absolute stairway to heaven. I'm pretty sure we do have an ETF over here. Somebody will shout it at me pretty soon, so maybe you can check that out. I do know that the IJPs have been coming up on my daily shortlists as well for the Nikkei. That's the IJPs, the local ETF here is the IJP for the Nikkei 225. I did tweet that chart during the week, and I kind of likened it to Bitcoin, because Bitcoin was looking good at the time. That one kept going, and of course my Bitcoin didn't. We might look at that at some stage today. We know whip around the grounds would be complete without heading over to here and looking at the bond market. I'm encouraged by some of the things I'm seeing here in bond market price action. Obviously, we're looking at the US 10-year yields. If you can hear some shouting from some rather crazy people in the background, that would be my family, and that's pretty normal for this time of the evening. So apologies for that. And what else? I was talking about the price action here, which is a little bit crazy as well, but we can see, importantly, that the price action has moved beneath the long-term trend ribbon, and the trend ribbon just somehow, remember, ladies and gentlemen, these don't exist. They're not actually there in space and time. I bait them on, but it is kind of doing its job in that, it was decisive, tried to hold, couldn't hold through, and then testing, holding, and coming back down again. And that short-term trend ribbon is also reinforcing. So with this indicating yields could come down, again, that's also supportive of the stock market. And don't forget that this entire move here is that up move in the NASDAQ. This move here is the pullback in the NASDAQ. And then this bit here is the up move in the NASDAQ again. There is one caveat, of course, because ultimately rates will come down if there's a recession, if the economy's in the toilet. And that's that little catch 2022. That's that little inflection point that we're going to have to tread as investors and markets and central bankers are all trying to tread this. Where do we go from lower rates are good to lower rates are really bad because the economy's falling to bits? I don't think we're there yet. So let's continue on this thought process that lower rates are still good. I don't see anything sinister, even that's still heading back down, and that's good too. Carl, you keep showing me these bloody Japanese government bonds. You can't just tell me what's going on with Fortescue. Mate, come on. Okay, these are important, particularly for our local resource companies, because a lot of these big Japanese pension funds will invest in our big resource companies and other big blue chips as well, because they're looking for quote unquote safer investments as well, and high yielding investments. And to obviously combat the fact that these are very low yields. And these yields heading down means that, Japanese pension funds are ultimately getting much lower yields at, 0.5-ish compared to, close to 1% not that long ago. So that's another big tick as well. If I'm even going to say particularly for local stocks, just looking at the Aussie yields, I would have liked them to be looking a little weaker than that. But we did have a pretty hot, Melbourne Institute inflation gauge print today, coming at 1% for the month of December. So, 1% is 12 months of the year. If you annualise that, that's not good. 12%, but it was about 5.5% per annum, and that's not good also. We haven't done this for a little while, have we? We haven't done this since last year. Looked at the banking indices over there in the US. Are we going to have the hashtag banking crisis? No, it doesn't look like it, actually. They look pretty good. They look way better than the last time we looked at them. So if we're looking for these canaries in the mine shaft, I'm not seeing them in banking, but we know where they are. They're over here in China, and we have, if we look now at some of these commodities now, because I'm showing you how bad the Chinese stock market looks. Stock market's always a great proxy for economic growth. Then we head to something like copper, and that looks pretty bearish to me. I mean, these candles here, look at these. Let me zoom in for you. Rather wait. I really feel that these are bearish candles here, breaking through that long-term trend zone, pushing up, trying to probe into that zone again, and being pushed back down. You can see those upper shadows, black candles, coming to a little bit of a point of demand here at 372-ish. Beneath that, probably 362-ish, and beneath that, you probably don't want to know copper bulls. Iron ore has had a bit of a pullback. There's actually a bit more of a pullback now. And that looks like that trend has broken, and seasonally, from the top, off the top of my head, we're getting to a period of malaise, maybe a slight weakness. I can't remember which one's more appropriate, but it's not booming, because the boom happens in sort of October, November, December seasonally, and that's what happened, to be fair. And if you catch any of those articles we put out on the wonderful Market Index website, my colleague Kerry Sun, using my research, mind you, has put out a few articles on that. That looks to have broken down, iron ore bulls, but we need to see, I guess, 126-ish hold there. I don't think it will. Those candles are pretty bearish. Long-term uptrend, I think you should see some sort of demand, excess demand coming back in there, just in line with that longer-term trend. But that's an interesting chart as well, and reflecting, obviously, the weakness in China. Natural gas, decent run. I know we've looked at this many times and got it wrong pretty much every time. I'm pretty sure about that. Would I buy that? Look, I'm going to go with no, famous last words, and just bumping into the long-term trend ribbon. I know there's a cluster of white candles here, but I'm not far off buying it, mind you. I mean, a little bit more upward price action, a bit more contraction in the trend ribbon, the orange ribbon getting narrowed together, and then I could go for a bit more of a specky buy. But again, every time I've told you that, it's inevitably ended up wrong. Looking at the rest of the energy complex, it looks pretty awful there. Crude oil, I know there's all sorts of talks about, certain I don't know, organisations, is that the right word, preventing certain ships from safe passage through certain parts of the world. Keeping things very general. But you're not seeing that really reflected in that chart, nor that chart there. That's Brent Crude. For the Whitehaven plans, that came up in my shortlist today, Barry, you would have seen that, and it's not going up because of that, because that looks rubbish. That's Newcastle Coal, and I'm pretty sure Stanmore Resources, which, correct me if I'm wrong, is more of a coking coal company, came up, and that chart there, hopefully you can see the dots, looks pretty flat. So if we head now, and just, I guess, in keeping with the whip around the grounds, gold, looks okay, sawtooth pattern, ho-hum, not getting too excited about that. And then we'll finish on the best of the best, which is uranium. And you would have heard the news today that Kazatomprom, which is the Kazakhstani government-owned uranium producer, responsible for anywhere between 20-something and 40% of global uranium production, depending on which article you read, is having some problems there with getting enough sulfuric acid, which is used in the uranium extraction and purification process, if that's the right word. And also they're having various construction delays at some of their projects, and you can see there the uranium price. You can see where the dots are falling because we just get the single print there, over $100 US a pound officially. Now, there was a murmur of it during the week, and that got us all very excited if you're uranium bulls. And I'm frustrated by a certain uranium bull that is, look at everybody jumping on the bandwagon now, and I'm so clever because I've been suffering through it for many, many years. I just don't believe in that. I mean, the market's going up and people want to get involved. Good luck to them. Don't try and make yourself sound smarter, because, like I said, you suffered through it for years and years and years, and you're finally right now like a broken clock. I just think, if you're in it already, you need demand to help make it go up, and just enjoy the fact that other people are getting involved and providing you with that demand. But I digress. There are some absolute tools, let's just say, on X/Twitter, of which many of you probably consider me to be one of them. Let us head back to the Amy Broker site now, because I think that's a suitable whip around the grounds. If I've missed anything, let me know. And we are going to head to the apologies. First, French NZ is up with his... sorry, Carl can't make it. I'm in New Zealand and it's too bloody late over here. So let's go to his suggestion of AAC, which looks half decent, you know, and already I kind of feel your brain's ticking over, kind of feel, I know you're all muted, but I can kind of feel or hear your sentiments when you look at it, because I know you're looking at the same things I am. You're looking at that great big bloody pink zone, which is a dead giveaway for not ready yet, but we are seeing the light green coming in. There's a bit of an uptrend there, and that's what's great about these moving averages. They're very visual, so when we want to scan through a large list, whether that be in TradeView or Amy Broker, we've generated it through our program scan, we can get through this very quickly. Boom, 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 just looking at the colours. Okay, it's very visual. Amber, traffic light system now, we could go for a long if we can see the price action and the candles telling us that that's what we need to do. That's where I start to zoom out, because you know when I'm starting to zoom out, any sort of turnaround play, I want to see, well, how much is left in this? You know, where are the big points of supply from the past? Because they are probably going to be points of supply we're going to have to contend with again in the future. And look, those are overlapping, and there's more. And you know, depending on what it's going to be, you know, they could be lots, and they could be, you know, thick. What's the right word there? But condensed, perhaps. And that is putting me off this one a little bit. Look, if I had it, I could hold it, and that would then require this to be the best thing I could do with my money. I'm not sure it's going to be, considering some of the other stuff we're going to look at tonight. But I can see definitely an improving trend here. You might say inverted head and shoulders, if you like. Very little volume, very little interest. And that's an impediment to me personally calling this a long. But let me say I can certainly get to a hold here. I don't think it's a screaming buy for you. French NZ, EVS, let's see how we go on this one. Okay, well this looks much better. Similar sort of turnaround play, but far better price action. So just comparing the pair, you can see the overlappingness, okay, and that is a word, you can Google it, overlappingness of the price action here. And I'm making that up, it's not a word. The overlappingness of the price action through here, compared to the unoverlappingness of the price action through here. It's much less unoverlapping, much less overlapping. Because if I draw the price action through, I know it's a bit sketchy, a little bit illiquid also, but you know, I'm getting something more like that. So getting these big motive faces. Motive simply means moving, and then we get these very shallow retracements. Now, but we still have some supply not too far away here. I like this one. I do like it. This is something I could get involved in for a turnaround play. I'd love to see more volume in here, you know, a little bit more turning the dial up, getting people, you know, interested, get the music cranking. But it's fine. Again, if I had it, I could 100% certainly hold on to it. I can't see any reasons to get out of it. If I don't have it, it's a tricky one. You know, it's again, maybe I'm going to say, is this the best thing I can do right now? And it might not be. So, you know, with that in mind, let's go and look for some other stuff, which could be the best thing we can do with our money today. Wayne's got one, Wesfarmers, which I think looks very, very good. I mean, I'm really struggling to find anything wrong with this. Double greens, again, that if you're scanning through this very quickly, it's just, boom, there it is, double green. I need to pay more attention. That's all we're doing with those moving averages. The other key part of moving averages, of course, is if they are indeed providing the dynamic support in the uptrend that we require. And for all intents and purposes, these appear to be. The candles are incredible. I just love seeing stuff like this and this, just these clusters of white candles, all very good. A little bit of supply coming in here, but nothing too sinister. I'm a happy holder. I can't see any reason to go 1/3 at this stage. I know there's a tiniest little bit of a supply side candle there, but it pales in comparison compared to the overwhelming number of demand side signals on chart. So happy holder here. Would I buy it? Look, depending on time frame, I think Wesfarmers is going to be a little bit slow and steady, isn't it? So if you're a bit more of a longer term investor, there's that word, no issues buying it now and just not stressing out too much about it. If you're looking to trade it, look, I'm not far off, to be honest. I think this could probably do $60, which is the next round number as well. So you are keeping in mind, you're getting in pretty close to a round number there as well. Again, very good, happy holder. Is this the one to buy today? Let's keep looking. Maybe we can find, maybe we're probably going to find something better than this. With that in mind, let's head to everybody who's in session today. And Barry wants to do the shortlist. Let's save that for the end, Barry, and let's do everybody's requests first, not to, do the work for everybody. Perry's got some US stocks, which I'll hold those off to the end, as does Nicola. Elders, I was hoping this one would come up. It is in the shortlist. I think it looks amazing. I think much like the NASDAQ last week, we said, it's one I was really positive on in the shortlist, and probably one that hasn't turned out. I can't remember if I said minus 1/3. I don't recall, honestly. If I did, that's fine, because if you sold a third, you've still got 2/3 left, and you would have had to buy it back really on this candle here, which is exemplary. It is the most wonderful looking candle. And no surprise there with the three. If you see these three tiny candles, if you see this big white candle, three tiny little candles, you're more than likely going to get one of these coming up again. And this was in my feature charts. I think it looks fantastic. And there's absolutely no reason at all why you can do whatever you want to do. But for me, absolutely plus 1/3. For your reference, this also would have been plus 1/3. And I know we can't go back in time, but that's how you would play it if you see that again in the future. Not this one, though. I think that was, whilst that was a good candle from, the demand zone where we would expect, I just think there was too much supply in the system to just take the punt on that one. But given that this big white candle took out that point of supply, then that is where you would absolutely be looking to do. Capitals, please. Point of supply there. So all pretty happy with Elders. For Uron, I don't think I can be any clearer with that one. Is there any reason to get out of it? Absolutely none at all, because we finished with this fantastic white candle. I'm pretty sure if we look over here, you can see that the high was 8.36, the close was 8.35. I think we can forgive it that 1 cent. Let us head to Jesse's got SMR, which was also my shortlist today. I can't remember if I shortlisted it in the shortlist. I didn't. It wasn't far away from the shortlist to the shortlist. It probably could have done with a little bit more volume and a few less. This black candle really that concerns me a little bit, but that's a great candle. I did shortlist it. It missed out on getting into the shortlist by a whisker. So pretty happy with that. No objections at all, Jesse, for you, or not for you, always for me. You do what you've got to do. But for the plus 1/3 for me on that one. And, trends are great. Price action. Look, price action could be a little bit better, but no, it's very good. It's very good. I'm really nitpicking there if I say the price action. It's not bad. No, it's not bad at all. SVW also looks very, very good. I guess probably one you've been on for a while, Jesse, because I've obviously been in my shortlist many, many times. And maybe you're wondering, is there anything you need to do with it? I mean, it's had such a great run. Logically, our brain goes, this has gone up so much. Surely it's too expensive. Things, if I go down to Woolies and, pineapples are usually $2 each and now they're $8 each, pineapples are too expensive. If I wait till next week, they'll probably come back down to $6 or $4. It's not how stocks work. Stocks don't go up because they're temporarily expensive, because the market's temporarily lost its mind. Stocks go up because there are people out there way smarter than you and way smarter than me and way much smarter than you times me, in brackets, squared, okay? They're the really smarty pants at all the big institutional investors. And they know what this thing's going to earn next week, next month, next year, and they compare those returns to the universe of opportunity out there, and they want to be involved. This is where they want to have their money. And the people who own the stock, they do that same research, and they realise that this is where they want to have their money. And when everybody, the whole market feels this is, it's somewhere you want to have your money, That's the chart you get. I don't think I need to say any more than that, Jesse. There isn't a single signal in there which suggests to me I need to do anything but run a full risk position on this. Now, what could change that? Yes, today wasn't the most wonderful of candles. Yes, if we got another little push down there, it's potentially making a little bit of a major, it actually technically will be a major top because you've got a long-term, medium-term downtrend on this side, and you've got the medium-term uptrend on this side, which means the highest point between your medium-term uptrend on your left and your medium-term downtrend on your right is your major point of supply. Okay, because this is your medium-term uptrend. What is a medium-term uptrend? Medium-term uptrend equals higher peaks and higher troughs, right? And your medium-term downtrend on this side, medium-term downtrend on this side equals lower peaks and your lower troughs here. Okay, and your highest point between your medium-term uptrend and medium-term downtrend, let me point to it for you, that's your medium-term downtrend, lower peaks, lower troughs, is your major point of supply. Otherwise, it just means you want to pay a little bit more attention to it. You've also got your minor points of supply, which in these webinars I just tend to label for you as just a POS. It's not a POS yet though, don't forget, because we need a lower high and a lower low coming down this side to confirm this as a peak. It's not there yet, but I'm trying to tell Jesse what would start to get me nervous about it. Okay, price action, which is starting to do this, and it would take something like that. It would take some really big black candles. It would take a close, I would suggest, beneath here, and each time you see one of those things, maybe a lower peaks and lower troughs, or a really big black candle or an upper shadow, that's your 1/3, and then there's a 1/3 beneath here, and you might only go your final third, somewhere beneath here. But it's a staged and stepped approach to your exits because we are trusting what is such an amazing trend. And you can copy and paste this methodology to any stock that you're holding right now. Lovisa is one that has done well also, and it's probably putting in more of those signs. This is a great little segue from SVW, which we're not seeing those signs yet, to Lovisa, where we're starting to see a little bit more of it. And I say a little bit more of it because this is a sharper sell-off than anything we've seen on 7 West Media, but also it's coming back pretty well as well. It's holding the short-term trend ribbon. It all looks like it's also held up a little area, a previous area of supply. So an old point of supply, as we tend to see in markets, the old point of supply there, and this actually, to be fair, was a major point of supply also, is acting as a point of demand here. So everything checks out. The price action, I still think is okay. Yeah, look, I mean, the last official peak is down here, or is it here? Is it here? No, here. It is here. So there's a little point there, and I'm just having to think about it because I'm looking for lower highs and lower lows. So that's an inside candle, but that's an inside candle as well. So it's not a point of demand. Inside, I'm going to say inside, yep, and then upside. So this is all one continuous move, and the last peak is here, 21.15 versus 21.13. Okay, so here's your little copy paste in there, which means that the price action is fine because we are actually seeing that the last point of supply, the last point of demand is at or above the second from last point of supply. Okay, there's your point of supply, there's your point of supply. So the price action, in theory, is still doing this, right? Where we want this area to be above this area here. So happy holder. Now, again, what starts to make us feel a different way. A nice big black candle through here, confirming this is a point of supply and a lower point of supply. The only way you can get lower points of supply in the market, ladies and gentlemen, is if supply is building and demand is diminishing. Supply is starting to win the battle, and then we know this is a methodology I've taught you so many times. When we are breaking through that point of demand, it's a compulsory minus 1/3 there. You might find that black candle is sufficient enough to give you minus 1/3, and then at most you'd be a third anywhere under here, but you could take more drastic steps than that. Let's keep moving to ASX, which was also in my feature list today. Actually, did run as a feature show. I like it. I think it looks really good. Turnaround play. So remember my 3 setups. You've got your continuations. That would be like your Wesfarmers, like your What was the other one? Looked very good up the top there. I can't recall. This is more your turnaround play. And because we have broken through that long-term downtrend zone has gone through the Travelers system, is amber now, it's compressing. The short-term trend is cradling and holding. The long-term trend now is supporting, offering dynamic support, not dynamic resistance like it had in the past. And again, who am I to doubt the strength of that long-term trend ribbon and what it represents. So now that we're above it, I'm pretty happy. We've got these beautiful 3 white candles here, which is very attractive, and a little bit of volume there, enough to get me interested. Where is the point of supply that we need to be concerned about? I think it's around there. There's probably a little bit here, but I'm not too stressed about that. This is the big one up here that I'd be more concerned about, and I think we've got enough room to get there, and hence I think this is quite a solid turnaround play for me. So I would be on this one plus 1/3. And I think I ran it 2 days. Did I run it 2 days ago? No, I didn't do a shortlist 2 days ago. It did come up on my scan a couple of days ago. I just haven't been doing shortlists since just before Christmas. But that would be your first plus 1/3 there, by the way. There you go. Thank you for those, Jesse. CXU for Huzel, CXU. Amazing, look at that. Plenty of places to get involved here. Cauldron Energy, so that's your uranium stock. Obvious reasons why that's going. I think these are all pretty good candles. I would love to higher close there, and maybe even there, but pretty happy with that. No complaints here. That's a little bit of an issue. Bit of supply creeping in. Is that enough to lighten the load? No, it isn't. I mean, there's just too much of a white candle there for me to be too concerned about it. It has had a great run. I'm grappling with these things. But no, I'm going to err on the side of no, I can't see any reason to go minus 1/3 at this stage. But I wouldn't be surprised if you got that minus 1/3 candle tomorrow or the next day. Okay, but again, it's minus 1/3. It's not tossing the baby out with the bathwater. The reason why I'm back here is because I'm looking for dead wood, and dead wood is latent supply that has been sitting in the system forever waiting to break even, cursing their luck because they bought Cauldron Energy on this day when they thought it looked fantastic. The last time uranium had a heartbeat and was about to go, and then they averaged down here, they bought a bit more here, they bought a bit more here, they reconciled it to never buy any more there. They lamented their decision to continue to own it here. Over here they wrote it off. Over here they didn't take up the renounceable rights offer. Over here they cursed management. Over here they got on hot copper and told everybody what a horrible company it is. Over here they cursed their luck. Over here they made a deal with God, and then that seemed to have worked, and up they went, and finally they're getting break even. It's a long-winded story to say that's what latent supply is. That's how supply, historical supply, manifests itself in the market, or why it might. I'm a happy holder there, Huzel, but you know what to do with it. CXU AKM, ditto, but less going back here. I mean, you've got to go back a long way to get anything that even resembles historical supply. 20, but it's a long time ago. I'm a happy holder here. No, I can't see any reason at all to be anything but a full risk position here. In fact, I can't see any reason not to add 1/3. It's that good. To use the cough button there. A plus 1/3 on that one. I don't know what they do, but whatever they're doing, somebody likes it. Plus 1/3. Likes, I think. Likes. Thank you for your time and energy presenting for us. I spent some time trying to emulate your charts with the same EMAs using TradingView as opposed to Amy Broker. With little joy. Oh, okay, well, 21, 34 EMAs, they should be pretty much the same. I mean, EMAs are generally calculated the same way for the short-term trends, and then 144, 233s for the long-term trends. You can probably Google Pineview script, EMA change colours, up, down, and you'll get some scripts. You could probably just copy and paste, adapt to make them be a certain colour when they're rising, for green if you like, and red when they're falling, or pink when they're falling. The only thing you won't have is the orange part of it, and look, I'm pretty sure I've told you that stuff in the past. It's generally if the moving averages are getting closer together, that makes them turn orange for me. So it's all pretty simple stuff. I've never hidden it from you. I've shared them with you and everybody from the start. I can't see why you couldn't get them working in TradingView with a little bit of support from, your forums. I hope that works for you. Shoot me an email perhaps, and I can maybe help you out with that one. Hi Chris, Qantas, which looks bloody awful. That looks really bad. There you go. If I had time, I would have done a bit of a short list today. I would have put IGO on it. Look at that. Imagine we could take this chart and we could turn every black candle white and flip it and mirror image it. We would get the most amazing looking chart for long, wouldn't we? It would just be the picture of excess demand. Well, it's not. It's the picture of excess supply. I digress. But Qantas is starting to look that way as well. And hey, love what I have to say about the world or not. And a lot of people don't like it, it seems, on Twitter. But it seems to work pretty well when you have a situation like this. You go through your green zone, you go through your amber, you manage to get away with one. But when you break through and you really can't get back above, you change over. It's never a good thing. And sometimes you do get a bounce. But when you touch, ladies and gentlemen, when you just touch that trend ribbon and you get pushed down again, and then you get these candles like today, I implore you, how good are these ribbons which don't exist? This is straight up, do not pass go, no holds barred, minus 1/3 for me, okay? And I totally accept that Qantas is a quality stock with a great dividend yield or whatever, and it could be $7 tomorrow. It might get taken over by, British Airways or something. I don't know the future. All I can see is that, on balance, investors, they really don't want to be in Qantas anymore. They want to get their cash out and they want to go do something better with it. I suspect that you were after a short there, Chris, that's my guess. NXL, this is one that has done well until they had a profit update, which clearly, and that was on this here, clearly told the market something the market didn't want to hear. And I'm going to go species ending event. These two weren't enough, I feel, to be minus 1/3. Me personally, no, I would have been full risk position up until that. I think this candle here, though, does change things enough. I think you'd be really stubborn and what's the wrong? You're just not heeding the signals. Again, I used to be really good with words. I'm not anymore. And recalcitrant, what's the right word? Obstinate. To ignore that. So minus 1/3. Today's lack of any sort of demand side response is disturbing, and I'm going to go minus 1/3 for safety. And I feel, therefore, the most you could still be running with this is plus 1/3. And if you are that way inclined, you are so devoted to the NXL story, maybe you want to do something like that. But I'm getting more and more the feeling that this might be a case of, that this is probably a little bit too hard, in the too hard basket from here. If you were, I'm still, what's on screen, minus 1/3, minus 1/3. And then if you were maybe to get something like this, which threw in a candle and sort of failed in here, then that you might get a better 1/3 out than waiting all the way till down there. So I think we've got some problems with NXL. Okay, let's head to Wayne. I've done your Wesfarmers, so let's do EOS, and it's looking okay. Very sideways, isn't it? We are seeing a little bit of a pickup. We're seeing price action trying to build here, high peaks, high troughs, but the candles are pretty good. Today's price action not great though. Look, it's okay. There's a fair bit of work that needs to be done through here as well. Obvious points of supply through there and there. It's not one I'm getting particularly excited about. If I had it, I guess if I felt this was the best story I knew, I could hold it. But if I'm just owning this purely on the basis of the technical picture, from a technical perspective, I don't think there's enough reason to be full risk position here. I don't mind having some skin in the game on the fact that the technicals are showing demand is reasserting itself. The story, correct me if I'm wrong, the space, get the air quotes going, space lasers. So maybe that's the story you want to have some involvement in. Okay, let's go to commodity uranium futures. I did do that earlier. I can't see anything in that uranium chart which suggests it's going to reverse course anytime soon. It looks very strong. From Joel, we've got BHP. It's always an interesting chart to look at. Honestly, I would have been 100% a holder here. It had broken through 50, beautiful white candles, all hunky-dory, and holding above there. Really, for me, it's all full risk position from there. But we really can't ignore the fact that the market is going to do things that doesn't always, we don't always agree with. And what happened? We know that the backside fell out of the iron ore price, and obviously that's hurting BHP. Copper's come down as well. You can't see the future. You didn't know it was going to happen. Don't beat yourself up. The question is, were there signs in the candles that gave us some clues to get out? Two black candles here, they're bearish, but I don't think they're enough for me to want to lighten the load. This is a concern for me because, I reckon, did we close beneath that trough there? Look, we probably did, but only just pipped it. So if you wanted to go minus 1/3, I feel that's the first place you could have gone, and it's not minus 1/32. I think that's a bit too conservative. Let's go minus 1/3, and then the follow through the next day here. So that candle. Or that candle, but not both. One or the other would have been fine. And then, to be fair, I think the follow through here is a minus 1/3 as well. So as traders, as an investor, you might be no more than plus 1/3 down here. All right, just holding it because of the long-term trend. But I do feel as traders, you did have a few signals there where you could have exercised some exits based upon the supplies that was in the system. So I'm going to go at most plus 1/3. If you're not out yet, Carl, big deal. I get it. I can see what you're saying, but it's completely useless to me, mate, because I didn't do any of that stuff. What the frick do I do now, mate? $1 million question. It's still a vertical decline. It's still punctuated with a bunch of black candles. Demand zones. Okay, so let's look for some demand zones. I would expect that this is where demand is. There's also actually some pretty good demand in here from the past. This is where fund managers were buying, and they were properly buying through here. So there's a possibility actually in the not too distant future, around here we could see some white candles come back in. I can't see them yet, so I don't know. And then it's just a matter of seeing how you go with the bounce. If you get something like this, you can keep holding. If you get something, let's go to the red colour here. If you get something more like this, all right, then you want to start doing the stuff you should have been doing before, okay? And then it's up to you how much you want to hold. BHP is my favourite stock ever, Carl, so I'm never going to sell at all, but, I don't mind trading around the trend. But, yeah, I can't give you any better news than that, sorry, for Joel. Let's have a look at Rio, which is not as bad. It's a little bit of a milder fall, isn't it? But, it's trying to hold on to this demand zone here. Fortunately, we can actually see a demand zone right where it is. And then there's one there. So I think there's a stronger... It's still not a full risk position for me. I think you're out at least 1/3, maybe 2/3, but a little bit more comfortable holding that final third. I would be less comfortable if we started to close, sort of down here-ish. There's a few little demand side candles in here. But yeah, it's still vibrating within what is ultimately a sort of long-term trend. So I can see absolutely reason to have some skin in the game, but maybe the long story short is not a full risk position at this stage. The buy me a coffee is not working at the moment, so they have sent me an email asking me to justify my use case. I'm in the process of doing that with them, so they've suspended the account in the meantime. So They said if I can't justify the use case, they will refund all of your money. I've looked into it's 4-star on Trustpilot. It looks like a legitimate enterprise. I did all the DD before, but I'm having an issue. If you want to send them an email and say, hey, I'm Carl's a good guy, maybe do that. I don't know. It's very frustrating. So it is suspended for the time being, but hopefully it will come back. Okay, GOLD, which is that's a goat. There you go. Is that the Nathan Lyon? That's the GOAT wide moat ETF. That one looks pretty good. That wasn't the question. The question was gold, which I'm sure it's in here. GOLD. It's an ETF. There we go. We said earlier on in the presentation, gold is looking like a sawtooth pattern. It's a bit ho-hum. This is a bit ho-hum as well. Full risk position, probably not. I can see some reason for having some skin in the game. Certainly it is a long-term uptrend and a very well-established one. It's getting close to the support here of the dynamic long-term trend zone. And today's gap and run is actually very encouraging. I'm not sure I'm a plus 1/3, but another white candle, another strong close, closing above this area here. And I'll just zoom in on that one for you. I could go plus 1/3 if that occurs. Okay, but just for now, I think just biding the time a little and just requiring a little bit more confirmation that we are having excess demand return to the system. And until it does, we're just going to sit on our hands a little bit. WIRE, W-I-R-E, which is the copper miners ETF, and we did in our whip around the grounds look at the copper chart, and that looked pretty awful. So I'm not sure actually why this is actually looking half decent. It's not good enough for a full risk position. I think we can all agree with that, but it's not terrible either. At most, maybe I've got 1/3 of a full risk position, but no more than that. I'm not looking to add any, I think, for a while. I'd love to see the copper chart pick up before this, but in theory that shouldn't matter. In theory, just trade what you see in this chart. If it did something like that on screen that I've just drawn, perhaps I could get interested, but not until then. Thanks, Ron. ATP, US people, we're going to get to you. In fact, I'm going to do the last. I'm going to go super fast here on the last few Aussie ones. No more Aussie ones, and then we're going to get to the US ones, okay, in the next few minutes. We've done for you there, Rebecca, the comparison of BHP and Rio. Coincidentally, somebody else asked that question. For BIPN, we've got ATP, which I'm guessing is Atlas Pearls. It looks amazing. What a wonderful looking chart. Great short-term uptrend, great long-term uptrend. A little bit concerned by the price action. No doubt you are seeing BIPN, no doubt you're charting this as well, and you've drawn these arrows in on your platform. It's frustrating you. You're lamenting the fact that there's excess supply creeping its way into the system. You'd love it to go higher, to get more profit, but we get what we get, unfortunately. And I would suggest that if it closes beneath this level, we are lightening the load. Just adjusting the background volume there, and close beneath this level here. We would be minus 1/3. Minus 1/3. I don't like the building points of supply here. That is a concern, but not the most liquid company in the world either. Happy holder in the meantime. BOE, BVS, sorry, is the next one. Which I thought about this actually today. I looked at it in my watch list as I was doing my shortlist for you on Twitter, and I nearly put it in. I very nearly put it in the shortlist. It was never going to make a feature chart, but the question was whether it deserved to be shortlisted. And I do like these 1, 2, 3 white candles at the short-term trend zone, but I just felt there's just too much supply in the system. I mean, it's manifested itself. It's there. And yes, there's some demand, but you've just got fund managers just bashing away at each other. You've got a fund manager that goes, you know what, Bravura is overvalued, and we got in it when it was undervalued. Hey, we're so clever, ha 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 ha. We're value investors. We thought it was great value at 30 cents. Told you so. And at 90 cents for them, it's overvalued. But how many times have you heard a value investor get up on TV and say, yeah, I was in that, I sold it too early? All right? Give me a thumbs up if you've heard that. Now, value investors that are looking at it now, they're going, this is great value, we think it's worth $1.40, right? They just haven't they're not anchored to that other price point. So they're buying now. You've got people looking at this going, it's a bargain, and then you've got other people who are in 30 cents looking at saying it's not a bargain anymore. And those candles tell me you've got this battle going on here. And I'm not sure who's winning just yet because the trend is pretty flat. So I like it. I'm interested in it. I'm probably only one more white candle away from having a crack at it because that's all we're talking about here, really, isn't it? That's all, like, you know, whatever you're comfortable risking on a trade, if it's $500 or $1,000 or whatever it is, if it's $300, let's use $300 so I can divide it by 3. We're only now talking about just pumping in $100 on it if we get one more white candle, and that's all we're doing. And then if we get another white candle, we'll pump the other $100 in. If we break through this point of supply here, we're going to pump in the final. I mean, we're trading in amounts which we're not going to lose sleep over. We're spreading our risk far and wide so that nothing's going to come up and bite us. And that's just my style. Other people prefer to be very concentrated and have sort of high conviction trades. It's just not my style. That's because I have no idea. I shouldn't say I have no idea what any of these companies do, because most of the time I do. It's just I don't care. I couldn't care less. And because I don't care about it, I'm not going to bother reading all the bloody reports on it. That's why I'm not risking my whole world on it. I'll throw some money at it, and while it's going up, I'll have it. I'll own it. And as soon as it starts to look good, because I've got no idea what the hell this thing bloody does, or I don't care, I'm going to get the hell out. It's this flippancy. It's this laissez-faire, don't care attitude, which I find works for me. All right, put a bit on this, put a bit on that. If it does well, put more on. If it doesn't do well, get the hell out and go find something else to put it on. And it's not for everybody. Some people feel, I'm gonna be high conviction, this is the one, And I've tried that, and I can tell you, there are some times of my life where it really wasn't fun because all the conviction was put on a piece of junk that cost me, months, sometimes years of my life waiting for that piece of junk to go back up, and often they didn't. I don't do that anymore. Thank you, Barry. Yes, you can do that. Rock in the USA, we're going to get to Rock. JBH, which I mentioned quickly because it's amazing, isn't it? Stairway to Heaven. Would I buy this now? Look, I'm not going to buy it. I know I put it on Twitter today, and I didn't mean to imply that I would buy it here. It's too far away from the green zone. I'm going to say that. But it still is a picture of demand. Would I sell it? No, I wouldn't sell a share. I think this is amazing. It's a full risk position for me. And I know I'm at risk of the next day. I told you so. Actually, I just saw something, which means I will sell some. I told you so. It was too expensive. It went up too much. Look at the chart. The RSI was overbought. You numbskull. The only reason I would actually toss out a third just for the hell of it is that round number at $60. $60 is a round number of some consequence. And therefore, I'd just go 1/3. I'm 2/3 here. Any sort of pullback, next bunch of white candles, I'd be looking to whack that 1/3 back on. But that is the only reason. If you don't wish to follow through on the round number, then there's no other reason. It is a picture of excess demand. No reason to sell there. Let us hope that's the Peninsula uranium stock. I think this is the only uranium stock not going up, and perhaps you are now starting to understand my convictions about high conviction trading. Okay, I know you know that Peninsula has got this great resource over there in the US, and it should be doing much better, but it's not. I can hold it. I'm not a buyer. No way. And that could be famous last words. It could be 40 cents tomorrow, but there's not enough in that run to suggest that people want to be on this one. Carl, been loving your articles on a market index. Thanks for your great content. Absolute pleasure. Rebecca, that's what pays the bills. Elders, we've done. I said to sell if it went below 720. It didn't. Okay, good. Woo. VMM. Oh, okay. I don't think we've done this one before. It doesn't ring a bell. But we've got problems here. What do you reckon? Type in the thing. We're at the bottom, so you can start typing. I'm going to go to the top down to all the US ones. What do you reckon? What should we do here? I'd love to turn on all your microphones and have you talk at me at once. C79 if I have time. I've always got time for you, Claire. Let's go that one there. I'm going to go minus 1/3, Claire, just as a precautionary measure. I don't like these candles. So I don't like this one, obviously. This is good. This is like Yep, that's what we're supposed to do, but I don't like this one. So the fact that this one has occurred after this one, it's even worse because the demand that should have been, we can see the demand here. Not should have, the demand was there, but it's not there now. Why is the demand that was there? Because I know I've put too many arrows on the screen. Let's go candle A and candle B. Why was the demand that was there on candle A is not there anymore on candle B? Where did they go? And that's what concerns me. So for me, I'm going to go minus 1/3. And I reckon it actually closed beneath here as well, didn't it? So I'm going to leave it up to you, an optional second minus 1/3. Okay, but that's all. That's where I'm at, and then I wouldn't be contemplating, the final minus 1/3 probably until under there. But taking some profit off the table, at least a third, maybe 2/3, up to you, and leaving a bit of skin in the game. Hey, hopefully you've been on that for a long time, and you've done really well out of it. Let's go. Thanks, Jesse. Send Grange. No, you don't have to do anything like that. That's not why I do these things. Hopefully it comes through. I actually enjoy hanging out with you guys. The reason is I think I've learned a little bit about the markets. Hopefully you agree that I'm reasonably good at what I do, or maybe I know what I'm talking about. It would be a shame to leave it all in here. I feel I need to get it out there into the world. A picture of excess demand, absolutely not a reason at all, I think, to sell this at this stage. Would I buy? I can't. I know it's so far from the green zone. It is miles away, but it is blue sky. I mean, it's a buy signal. It's plus 1/3. I mean. But if you do it, just understand that the further away you get from my light green zone, the more likely you are to have a mean reversion at some stage and pull back. I think did we look at it here last week? It was somewhere around there anyway. I did write about it, market index. I'm going to go plus 1/3 on that. If you've got it, at least that tells you, Carl's still uber confident about it. Sudesh says sell for VRR. I'm on the same page as you. Let's go back to VRR and finish, because I do want to give the person who asked about that their time. VMM, I should say. VMM. We've got big problems here. So you've got your big major point of supply here. This is not quite, in fact, this is a major point of supply. There you go. And we know that when they get promoted, they compel us to do more about it. And I'll tell you why this has been promoted in a second. That's an inside candle. And see, I'd have to measure them, whether that's an upside candle. So I'm trying to figure out whether this is a trough. Doesn't matter. That's a trough. That's a peak. That's a trough. That's a peak. That's a trough. That's an inside, outside, inside. Wow. I'm going to go here, 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 and here. And you can do these as well, because I've taught you how to do them. It might take you a little bit longer to figure it out, but it's all the rules I've given you. And because we have the medium-term uptrend on this side, right, and the medium-term downtrend on this side, it makes this the major point of supply, much like we had the medium-term uptrend on this side and the medium-term downtrend on this side. And when you have lower major points of supply, this is not good. And you could have figured this out really right here. This is the candle here, where it's kind of lights out for me. I mean, certainly minus 1/3 if you had it, and then this is a minus 1/3, and really today's candle's a minus 1/3. So there's no reason to have, it's not a matter of having a full risk position. I can't see reason to have any risk on this particular trade. I'm going to scroll back up to the top. We're going to do all of the US stocks now, which will require me to change databases. So that's going to take a second. And while I'm doing that, take a breath, grab a drink. I should probably do the same thing. Let's go settings, login details. I know it's a pain in the ass, but I haven't been able to get that money out of Buy Me a Coffee to pay for my US data feed yet. So let's do that. Let's go to here. I must admit I haven't practiced this since last week. It did work last week. And we're going to go to here. I'm going to switch that off. You can see that disappear. And we'll go here. And while we're waiting for that to update, Why don't we have a look at Bitcoin? Let's go into wrong place. Let's go to crypto. Let's go to Bitcoin. And the big problem, obviously, was the these two, that candle there, and that candle there. And we see it earlier on. I said, was it Nuix? Nuix, I think it was. A very similar candle pattern. I said, bit of a species ending event here. And certainly the combination of those two candles for me constitute a minus 1/3. I haven't sold any, by the way, and I'm not going to. But I'm a hodler. But yes, if you are a sensible person, that's how I would behave. And then you're looking at something like a close under here is another minus 1/3, and at most, I believe you would be at plus 1/3 for the long-term uptrend to see how it goes, and that's how you would do that one. Ethereum, which is down here, it's the other major, looks much better, in fact. So that I don't. Anyway, there's bit of a black candle there, but nothing too sinister. I don't think there's any reason not to run with a full risk position on that one. I have updated the database on the other side, so let's head back here now. And the button I didn't press, which you can't see, is down here. And we're going to do that. And it's going to wipe out a couple of things, which I forgot to save and back up before the start of this presentation, which is annoying. And I'll get your first one up for you, Perry, which is MOD. So we're going to go in here, here, here. That's weird. MSFT. Okay. I did everything right. I have correctly changed databases. Sorry, look, I don't know. I'm going to head over here. So we'll do it over here. No big deal. I can get these anyway. Just as easy. MOD, Modine Manufacturing Company, NYSE. Hey, we got it anyway, right? Now, that is a picture of demand. This is the best chart I've seen today by a long shot. Just a picture of excess demand. The price action is exemplary. The candles are amazing. The trends are perfection. And I'm zooming out to see if we've got anything in the ways of overhead resistance, and I'm guessing we don't. I can do that probably more quickly by going back to the weekly chart, and there isn't all the way back to the turn of the millennium. And I can't see any reason at all why you wouldn't be running with a full risk position. And if you did, that is if you had it, and if you didn't have it, then I can't see any reason why you wouldn't, on the basis of the next open, look to implement a plus 1/3. Perry, you've outdone yourself again. Let us head to Perry's second one, which is COST, that's Costco. And if I escape that and escape, you see why I'm not here often, because I'm not as good with the with the platform. But it is a perfectly good platform. It does everything the other one does. I'm just not as familiar with it. We're going to go to Costco, which ditto. A little bit of a medium-term downtrend here, sure. Bounced off the short-term trend perfectly with some amazing candles. It's taken out that long-term peak. If I go back to the long-term trend, it looks even better. I mean, look at this two-candle pattern, shallow pullback, huge gap and run through here, breakout of the long-term high, big base pattern. Yeah, there's no complaints about this for me. Absolutely, this is also a plus 1/3. If you don't have it, and if you do have it, then I believe you are running at a full risk position. We're looking for Perry's next one, which is FICO, which I'm sure we have done before. Fair Isaac, Stairway to Heaven. Hopefully you've stuck with it. I can see where you might not have, though. You might have lost a third back there, but otherwise hasn't given you too many reasons to doubt it, and no reasons to doubt it now. I won't zoom out because I know this is all-time highs, and once again, no objections to running a full risk position if you're already in, and if you're not, I can't see any reason why you wouldn't do plus 1/3. And Microsoft, MSFT, there we go, to escape, MSFT, looking just as good as those other ones. The AI twist as well, isn't it? There you go. Magic. The week looks even better on the weekly chart. It looks cleaner. The price action is cleaner. The candles are cleaner. There's less volatility in ebb and flow. It's just a picture of demand. Happy to go plus 1/3 here also, and 4 out of 4. But I would expect nothing less from Perry. Thanks, Perry. Let's go to Nicola. Oh, tough act to follow, Nicola. How are you feeling about these now? Going after Perry. Let's see how she goes. GE, General Electric. Oh, I think she's done pretty well. Great trend there. Look, last candle, not as good, obviously. A little bit of a black candle, but not terrible at all. I mean, tiny, minuscule, inkling of supply amongst what is just a picture of demand. If you want to really time this one, wait for the next white candle and then go plus 1/3. If you're not too fussed about the timing, then plus 1/3 anywhere you like, because it looks very good to me. DASH is the next one. DoorDash looks very good. Not as good as some of the other ones, perhaps, but only just missing out. My eye cannot shift, Nicola, from these black candles here, which tells me there's just a fund or two, pesky fund or two working in the system. Having said that, look, a wonderful white candle here, eliminating that supply. It all looks fine. I can't see any reason to doubt it. If you're on it, I'm a happy holder. If you're not on it, would I go plus 1/3? Look, I can't see why not. I think it's fine. Is it as strong as some of the other ones we've seen? Up to just those last 4 from Perry and maybe your first one? Maybe not quite, but I'm just really nitpicking here. And the only reason why I'm nitpicking is because as well as me, in the US, you are spoilt for choice, right? In Australia, we've got a handful of really nice looking charts, but in the US, you are just looking for reasons. Am I right, Nicola? You're just looking for reasons to just bat something away because you've got so many other charts which look so good that you're trying to really, fine tune and just split hairs against. And sometimes it turns out to be the case, and I find this in the US, the one that you didn't do is the one that bloody goes, and the one that you did do might not necessarily not go, but might not do as well. That's what I find anyway. Maybe I'm building it up in my mind, but it's probably not the case. I like this one as well. It's got a great trend. I can see the price action coming back to high peaks and high troughs through here. I can see some great candles. There's a little bit of a point of supply up here. Do I want to mess with that point of supply? Do I want to tackle it? I can't see why not. It's fine. I'm happy to have some risk on this. Probably not a full risk position just yet because of that point of supply. And you get some skin in the game. You might have a chance to get a little bit more in before there on another signal, and then waiting until we close above that for the final entry, I think. But otherwise, no complaints about that one at all. That's Ferrari. Okay, well, there you go. Didn't know that one. ETRN, Equitrans Midstream Corporation, which looks great as well. Last night's candle, I should say, Friday night's candle is not perfect, obviously. You can see there a bit of a shadow, but look, again, nitpicking, it's all good. Happy days. That doesn't, put me off at all. There is a bit of a point of supply there, but the candles heading into that point of supply are pretty good. Bit more of a turnaround play, but equally as valid as the other ones. No complaints there. Let us keep moving. I'm not sure if I had any other US ones. And if I get to the end and I haven't called yours out, just shout it back at me. ROCK in the USA, says Adonis. How about that? Magic. I really like this one. And what I'm really drawn to is this big shadow here. I really love that shadow. And look where it's happening. It's happening in the short-term trend ribbon, exactly where we want it to happen. And the short-term trend ribbon has been holding the price up. So it's doing everything it should. A nice little shadow here, and just a pretty little picture on Friday in that candle. I know we've had a little bit of a medium-term downtrend through here, but it's very shallow. The impact of that lower peak, lower trough pattern is so shallow, and it's been held so well by the short-term uptrend for me. This is an absolute plus 1/3. If you've got it, full risk position. If you don't, I'm happy to add some. Thank you, Adonis. Let us go to the bottom of the list. I have done the webcast recording quality was notably better on my rig and bandwidth than live stream. Not sure what that means. Ability to watch full screen in focus during the replay recording. Yeah, recording will always be clearer. Yeah, so I mean that's your worst case scenario. CAA, I will do that. Oh, Barry, yes, I'll do yours now. Better visual quality on the stream this week, says Jesse. That's great news. Let us go here, and I'm in the wrong database again. Yeah, I'm going to have to write myself a little list of things to do to make that work, because I've definitely screwed something up along the way there. But bear with me for just 1 second while I switch this back. And we've also always got TradingView as a worst case scenario, so it will happen for us. Let's go here. Let's go enter. Let's go here, here, here. Back to here. I know it's blank. I know you're seeing a blank. Reboot that. Click on that. Coming in, let's try that. Bugger. Got rid of my watch lists. Cleared my watch list doing that, so it's not an ideal way of doing it, but we are back. So let's go to Barry's CAA, which I shortlisted today. Looks amazing. Looks as good as any of those US stocks. It is not the most liquid company. I mean, look at the scale here on your volume. You've got 50,000 shares. On a $10 company, so it is illiquid. Understand that when you get into it, but it is a stairway to heaven. So, yeah, no complaints from me there. And it's one I've shortlisted many times. And it's in today's shortlist. Let's do your next one, CPV, which is also my shortlist today. Barry looks very good. It could have had the tiniest of a better close, but. No complaints there. It's a little bit of a ways away from the green zone, but I think if you're just adding a third to see how you go, no complaints. Yeah, I mean, looking out, your next big supply level is not, until a ways away. So no complaints about that one. And then we're going to MRM, which, I think this is probably, and look at that weekly chart, it looks just as good there. Probably my most shortlisted stock, you'll have to agree, in my daily shortlist is MRM, and that looks amazing. No complaints. $2, a little bit of a round number, but it finished with such a confident close today. I don't think we're worried about that. So happy plus 1/3 on that one. If you've got it, obviously you could add some more to that. No reason why you couldn't, but you're still running a full risk position. UNI is a new entrant to the list. I don't recall running this any time in the recent past, and because my last watch list was sort of just before Christmas here, I don't think I would have. So this is the first time you're seeing this one in my watch list, and I did run it as a feature today, so I do think it's a quality turnaround play. Possibly a little bit of supply coming in around here, but we're there, so we're okay, we're cool. We've knocked that one, that's fine, and then there's one there. Not too fussed about that. I like the candles. I like the little base it's built through here. I like the fact that it's respecting my moving averages. It's coming down, it's touching, it's holding. You can see the demand coming in there, as if my moving averages are real, as if the most ardent of ardent value investors are somehow looking at this level and saying, that's where we need to buy. It's so weird, but that's what's happening. So happy to run this one as plus 1/3 on a turnaround play, and then next white candle, looking to build a position into there, and hopefully take this into 620, and RIC, which was just a pullback and hold, and it looks like a nasty pullback. I know it's a few black candles, but within the context of this run up here, I think it's shallow enough to give it the benefit of the doubt. What is just the most amazing trend? So happy to go plus 1/3 on that one. Very nice looking chart indeed. A picture of excess demand, and you're getting in after a little bit of a pullback. Well, that is everything on the list this evening, and it's. I think it's time. I think we can probably adjourn this. I'm going to head back to the PowerPoint and sign off with the usual disclaimer that says that everything we've discussed today is general in nature, has not taken into account your personal financial circumstances, objectives, or particular needs before making an investing decision based upon this general advice. Consider it carefully against those requirements, or seek the help of a financial professional. Trading is risky. You are going to lose some money. It could be on the best charts we just looked at. We don't know. Ultimately, it is you and not I who's responsible for everything you do. With that in mind, it has been an absolute pleasure chatting with you today. I hope you enjoyed the presentation, and I will catch you again Monday next week, same time, same place, and the recording I'll send out to you via email using a YouTube link. Still using my old YouTube for the time being. Check your spam, check your junk, because some of the email service providers are not being very friendly at all. Otherwise, it's been a pleasure chatting with you. All the best for your trading and investing until we catch up again. Bye-bye for now.